Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Bull versus Bear webinar today, Wednesday, the 20th of September, Fed Day, FOMC Day today. So, welcome. Steve Miley here on the call for Trade Day. Welcome, everyone. So we're going to go through our usual regular run through in here today. It's going to be brief, right? Because let's face it, all eyes on the Fed. It's going to be. I don't think it's going to be a massive game changer, but we're going to get a lot of indication of potentially where we're going, not just into the end of the year, but also into next year. The dot plot chart we have coming up. I'm going to talk a little bit about the dot plot chart, saying which I haven't opened up any tabs on that, but I'll open up the dot plot chart. We'll talk a little bit about that for those of you who don't know much about it. Give a little bit of education as we go, because there's not really a huge amount to say. There is stuff to say, though, saying that. So I'm just going to do a little loop back to yesterday, because although we didn't have anything from the US, we've had nothing really at all from the US thus far this week, Monday through Tuesday. What we have seen here is some inflation data, which is piqued interest, and obviously all eyes are on inflation globally at the moment. So remember yesterday, I already ran through this in yesterday's webinar. We had the CPI, the inflation data for the Eurozone was lower than expected in here on the headline data. The core data came in bang in line. The headline data slightly beat expectations in here by a tenth on the month-on-month and by a tenth on the year-on-year data. And then fast forward to then, this came after the webinar yesterday, Canadian. So US, obviously cousins in here. The Canadian very much intertwined with the US economy, so it's important for that reason in here. It's not just a geographical, there's a definite connection between the economies, and higher than expected in here. So somewhat disappointing in here. The headline data in here coming in at 4% versus 3.8 on the year-on-year, and 0.4 on the month-on-month versus 0.2. So that's kind of a little bit disappointing, the uptick there. Obviously, we saw the uptick last week in the US data, and a slightly bigger uptick in here on the Canadian data. However, if we then fast forward to this morning in here, well, my morning anyway, for you guys sort of in the US overnight, what we saw is UK data. Now, remember, the UK inflation data has been very hot compared to the rest of the major global economies. It's been running really hot in here compared to elsewhere. The peak was higher than a lot of places elsewhere, going above 10%. And then on the way down, it's been very slow on the way down. But a big beat in here, significant beat on UK inflation. Now, there was an expectation that, remember, we have the Bank of England. I know all eyes are on the Fed. We're going to focus on the Fed. But we had the Bank of England tomorrow as well. And there's, expectation of a rate hike tomorrow. But now maybe not, because we've had a significant drop in core CPI. We'll probably still get a rate hike for tomorrow. But we saw 6.8 expected on the core number, and it came in at 6.2, and on the month-on-month basis at 0.6, and it came in at 0.1 in here, so beating expectations. So that was a positive in there. And then on the headline data, 7% expected, 6.7 came in, and 0.7 on the month-on-month on the headline data came in at 0.3. So beating expectations. PPI data slightly worse than expectations actually, but beating expectations in here on the CPI data. So that's a huge positive in here for the UK. UK's fight against inflation. So really mixed signals. Europe and UK better than expected over the past 24 hours. And Canadian higher than expected. So mixed signals in here. And not that it's going to sway the FOMC, but something they would probably just keep an eye on. Just note that's happened elsewhere in Canada, in the UK, and that we're seeing different kind of movements that compared to expectations. But generally, though, still moving in the right direction overall. So fast forward to today, we do have some oil. We have the oil data, the weekly oil data. So if you're trading oil, obviously you'll know about that anyway, the EIA weekly oil data. But fast forward to the later on this afternoon, if you're in the US, we have the 2 o'clock Eastern, 1 o'clock in here in the afternoon Central. If you're in the UK, it's 7 o'clock, and if you're on Central Time, Central Time in Europe, European Central Time, it's 7 o'clock in the evening. 8 o'clock. So 7 o'clock in the UK. and then 8 o'clock if you're in Europe, Central European time that is. In the US, it's 2 o'clock Eastern and in the afternoon, and 1400 hours Eastern and 1300 hours Central time. And then we don't just get the decision. Now, the decision, obviously, interest rate decision, no change expected. Here we are. 99% chance is built into the interest rate curve on the futures market, on the Fed tool in here. 99% chance that rates stay unchanged. So that's no surprise in here. But there is in here, going back to, we do also get the statement. So we're going to be watching for any changes in the statement. And then also, more probably importantly, the most important, we get the interest rate projection. So this is the dot plot chart, okay? Where interest is going to be in the first year, i.e. at the end of this year, at the end of next year, at the end of the year after, and then longer term projections in here. So we get the interest rate projections and also economic projections. Where does the Fed see inflation in the future? Where does the Fed see other data as well, GDP, etc.? Okay, so, but more importantly, probably maybe the economic projections, but really the dot plot chart, and really looking, where we're going to be at the end of this year and at the end of next year. And are there any clues in the statement that, are we looking for rate cuts coming through at some point next year? That's going to tell us in the dot plot chart. So if we go and take a look at the dot plot chart in here, so dot plot chart, for those of you who don't know, so tune out if you have already gone through this, or if you want to go through. So let's put the Fed dot plot chart in here, and then so dots on the Fed. So here we go. This is the actual. This is from the St. Louis Fed. Oh no, that's no good. No good. Don't want that one. Actually, probably best if we get it from the Fed. Oh, you know what? Let me see if I can then do the last, past year only in here. Yeah, let's actually get, so June was the last dot plot chart, and these are actually what they did. So this was the last one we had. And what we're really interested in is here. So each Fed member puts a dot on where they expect. So here, 2023, at the end of 2023. Okay, so let me zoom in a little bit. So this was the last one from the June 14th. They don't do this at every meeting, right? So I think they do this 4 times a year. I think it's quarterly. But we can double check that later in here. Let me see if it says at the beginning. So yeah, they predict the GDP number. Doesn't say how regularly this is done. Anyhow, let's go back to what it actually looks like. We know it's coming today. So each Fed member puts a dot, literally where they expect, the rates to be, and at the moment we're in that 525, 550. So if they thought they were going to be 525, 550, that's in here, this line here. Okay, so you see 525, 550 over here on the right hand side. So they'll put it in between the 525, 550 band. Okay, so that's why you get them in between the different levels in here, because remember it's done on a band, right? The Fed rate is a current target rate is a band 525 to 550. Okay, so so then we see in here, and then we can get obviously a consensus, and obviously the consensus here is in this level here. So at the last, we were looking at rates to be between 550 and 575. 550 to 575. Okay, and we're currently 525 to 550. So that's up in here 25 basis points. So looking for one more hike. They basically told us there were going to be 2 hikes. Remember at that point, since then they hiked again. This was the June. They hiked in July, and since then unchanged. So they were telling us 2 more hikes by the end of the year is what the average, what the consensus was, and we've had 1. So that's what they were telling us. What they're going to tell us this time? Is this actually going to go to 525 to 550, which would imply that the consensus is no more rate hikes before the end of the year? So that's going to be interesting. And then 2024 is going to be interesting, because obviously over here now we've got some Fed members looking for rates to kind of stay unchanged, but then here we see, look, by the end of the year they were looking at rates to be between 425, 450 band. Okay, so also notably lower from the peak at 550 to 575. So 125 basis points of cuts was pretty much where the average was sitting at, okay, in here. Okay, so it's going to be interesting whether this moves up or whether this moves down. So are we looking for rate cuts to come, and how big are rate cuts? But there's going to be no real assessment in here, because remember, this is the end of 2024. We can't tell how quickly those rates cuts are likely to come, but we might get a clue from the statement. So this is going to be super significant, super important, and expect a lot of analysis on this after the Fed meeting tonight, and then, or this afternoon if you're in the US, tonight if you're in UK, Europe, and then we will see. We will pick the bones out of that tomorrow on the webinar tomorrow. Okay, so that's going to be the big focus going into today, obviously. And before that, my strong advice. I know some of you are very, very short-term trading strategies, but I wouldn't be trading. I think it's a big lottery before that. So I wouldn't be opening up positions pre-Fed. Obviously, you can't trade. Reminder. Can't trade 2 minutes before, 2 minutes after. No orders in the order book either. So no orders in the order book, and no trading during the 2 minutes before and 2 minutes after. Just the announcement. Just 2 minutes. So from 1:58 Eastern time to 2:02. That's your window that you cannot trade in, and no orders in the order book. After that, do what you want. Okay. And then the press conference is 30 minutes later. Don't worry about the press conference. Okay. We're not. You're not embargoed at that point. There, it's only the blackout period for trading is the 2 minutes either side of the actual announcement. So 1:58 Eastern through to 2:02 Eastern time. Right, let's press on. 5 things to start your day in here. There's Jerome Powell. Fed will probably pause rates. Yeah, I mean, we know that kind of stuff. Keep borrowings costs in the range. We know that already in here. So, and then the press conference is obviously coming later. But the dot plot chart is really going to be, and they have been on this mantra higher for longer. Okay, it does stay the mantra, but we will see if they kind of step slightly away from that. The dollar is roaring back as the US economy defies pessimist forecast. So yeah, but both the strengths of the US, the relative strengths of the US economy, potentially soft landing, has helped the US dollar stay strong, even though the Fed are probably coming towards the end of their interest rate cycle in here. PIMCO in Asia, not so worried about that. Lower yields. We have had a slight dip in yields, but yields actually pushed higher. I'll come back to that yesterday. And also Brent crude retreated, having been pushing higher above $95 in here, with a lot of talk now moving up to $100 on Brent crude, and maybe up towards 95 on West Texas Intermediate WTI. That's the crude that you see on the futures market in here that we look at trade day. We're seeing and the market has actually retreated today. So Bank of England rate hike hangs in the balance. So just moving on to some headlines now from some of those, some of the stuff we've been talking about already. So because of that, better than expected inflation data in here, potentially maybe we're not going to get a hike. There was an anticipation of a hike tomorrow. Maybe we don't get that. UK inflation falls, throws the Bank of England a curveball before rates decision. European stocks climbed slightly ahead of the Fed in here, as the pound went lower. Pound going lower, and that positive news on CPI data, positive for the FTSE as well in here. Traders trim bets on the Bank of England tightening, and Fed expected to pause. We know that already in here. What else do I have? Fed vigil sees oil recoil and UK surprise. So we've spoken about the UK surprise. I've highlighted this in here. So we did have that data yesterday as well from the US housing market. Housing starts were a negative yesterday, but building permits, which many see as a better gauge of future activity, beat forecast. But then that's kind of smaller data, lower tier data in here. The housing market, yes, it's important, but it's not the be all and end all. What else do I have for you? Oil nearing $100 is a red flag for central banks' inflation fight. So yeah, okay, we moved up there, but we're backed away from there so far today. Oil dips after blistering climb with Fed and technicals in focus, and then Goldman raises Brent crude oil forecast to $100. So those are all being ratcheted up. Fed set to pause rate hikes, but don't count on another increase yet. And again, that's my view. I think we'll see in the dot plot chart a shift, because there is basically another rate hike kind of potentially priced in. If we go to the Fed tool in here, we go to year end. and we've got chance of a cut of 0. Okay, so we're currently 525 to 550, no chance of a cut. But you've got 35 plus 4. We're at 50-60% basically that we're unchanged a year, but there's a 40% chance of a rate hike. And why is that in there? It's because that's what the Fed told us they were going to do. They were going to hike rates twice from June before year end. They've hiked once. We've been on pause, expecting pause today. They've got 2 more meetings in here after today, so November and December. So basically, only 71% chance of a 71% chance of us staying unchanged by November, but then only a 60% chance of us being unchanged by the end of the year. So 40% chance here that we get a rate hike before the end of the year. My view, personal view, just my view, is that the Fed are probably going to step a little bit more dovish. I wouldn't be surprised to see that dot plot chart quite poised, and we have a kind of a cluster, either unchanged and then a cluster of one more rate hike. So it's going to be really on a knife edge where we get a rate hike, and that's what this is telling us anyway. I don't think they'll hike before the end of the year. I think they're done. I think the peak is in, and I think that, personally, I think that we'll get cuts sooner rather than later. I think we'll see the economy stay relatively firm, but if we get any kind of wobbles in the economy, I think the Fed will be quite quick to cut. And the market's really pricing in. If we go out to, if I go to March, 525 to 550, that's where we are now, is still the bet. Remember, there is a risk that we go up and then back down to there, right? But if we go to June, it's by June we're kind of then looking for rates to be lower. But for me, I think the risk is that the rate cuts will come before that. I wouldn't be surprised to see either a March or a May rate cut. What else do I have for you? So this is a little bit of a worry in here. Bond yields went higher yesterday. Bond market sold off. We went higher. We hit the high yields over here that we posted back in the latter part of August. Yes, we have backed off slightly this morning ahead of the Fed. No surprise in there. Not going to be at the very extremes going into the meeting, but this is a little bit of a worry. 10-year yields nudging at multi-month, multi-year highs in here at the moment. And just where we are overnight in here, slightly lower, about 0.6 lower in here for the Japanese and the Hang Seng, the Nikkei and the Hang Seng overnight. If we look at UK index is up notably, up 0.75%. That's on the back of that potential for a more dovish Bank of England after that better than expected UK CPI numbers this morning, and then the German and the French indices being tugged up higher as well, just over 0.5% on the DAX and just over 1/3% here on the French CAC index. And looking at the US futures, pretty much unchanged yesterday. We had a slight dip lower in the Dow, the S&P and the Nasdaq, but it was very marginal. And what we kind of lost yesterday, we've kind of recouped back this morning. So, up basically 0.2 this morning. So a slight rebound in here this morning. I'm not going to go into much detail on the charts in here because I very much think that, we are poised and it's going to break one way or the other. Very, very line in the sand numbers in here, above 45.15, you're looking bullish, and probably below, like I would say 44.80 on the S&P, it looks negative in here. And then if we go for the Nasdaq, above 15.461 looks bullish in here, and probably down below 15.300 it looks bearish. Okay. And then just have a quick look at oil, just to show you that oil pullback in here. So oil having spiked up there, very close to 95. Where do we get up to? 93.74. And there's a significant recoil and backlash, a significant sell-off from the highs. We were nearly at 94 yesterday, and we've been back sub 90. So $4 lower, like 4 to 5% off the highs in here for oil. So we had a significant recoil in oil. I mean, obviously the Fed are not going to really just look at the 2-day move. They're going to look at, well, is the risk that WTI and Brent crude go above 100, and do inflationary pressures come through? So that's going to be maybe a potential. The Fed may mention this, higher oil prices potentially feeding through in the next month or two could have an impact on the inflation data. Okay, that's all I've got. Any questions? Now, remember, please do, guys. I know you guys come on the webinars. I don't want to, I know we're singing off the same hymn sheet, and I know you guys know this, but 2 minutes before and after the Fed, no trading, please. Any questions? Nothing coming through. So I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. Helmets and goggles at the ready for the Fed. And I'll be back with you to pick the bones out of whatever the Fed delivers to us today. All right. Cheers, guys.